Do you have a vision of building up a large enough retirement nest egg that you can just live off of the dividends in retirement and not touch the principal? If so, you may have some questions about dividend investing. I've got those answers and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. I've had more and more people reach out with the vision, with the goal of building up such a large investment retirement portfolio that they just want to live off of the dividends and not have to touch the principal. And I don't know if it's circumstantial. We've obviously had an amazing run here in the S&P 500 in the stock market, certainly since COVID, but really even over the past 10 years. The past 10 years we've seen an average annual return of the S&P that far surpasses what you'd see over, much longer periods, the previous 50 years and that sort of thing. So it could just be the run up. A lot of people are seeing their portfolios swell. It also could be the risk and volatility. I've spent a lot of time talking about that as well. The growing systematic risk in the S&P 500, some big risks that potentially could bring with it a lot of volatility, and the concern of, I don't know if I trust that portfolio level, and I don't know if I want to be in a position where I'm spending down my portfolio. What if I got to a point where I could just live off of the dividends? It is the original kind of the way back version of passive income before rental real estate became so popular. And I get it. Building up a portfolio such that you're just living off of the dividends is extremely popular. And there has been this question in the past of, well, is dividend investing better than just a diversified portfolio? It depends. Mathematically, and just as a kind of finance professional, I would say no. It's not better. If there's an X amount of goodness from a company, all their revenues minus all their expenses leads to some sort of profit. If that profit is goodness, whether a company pays out some of that goodness in a dividend or keeps it invested, it's really the net thing to an investor. Many would argue, no, actually not paying a dividend and keeping the dollars in the company so that they can acquire more businesses, buy back shares, expand their operations or whatnot. That actually has more growth potential, and I get it. But I wouldn't say that paying a dividend is better per se than just a diversified portfolio or focusing on dividend investing. However, as an investor, a lot of investors, it's appealing. They like seeing that tangible benefit. The capital appreciation seems less in their control, and when they receive a dividend, they feel like I'm getting a benefit out of this. So even though I would say that it's not necessarily better dividend investing, it can feel better as an investor, and it's certainly in retirement. But it's not easy. So what is dividend investing? This is where you're intentionally building up a portfolio and using dividend paying, and not exclusively, but maybe in a more concentrated way, dividend paying stocks. These could be utility companies, these could be bank companies, typically there's certain sectors that tend to pay a lot of dividends, or you could be using an exchange traded fund or mutual fund that has a high dividend focused. If you just invest in the S&P 500 in a normal diversified portfolio and just thinking, I'm sure it's paying decent enough dividends that I'll just be able to live off of that. Guys, take a look right here. We're not at the lowest dividend yield ever by the S&P 500, but we're close, and the trend is clear. Right now, at the time I'm recording this, that the dividend yield of the S&P 500 is just over 1%. The lowest level ever recorded was 1.1%, and that was back at the height of the tech bubble. And that sort of, explains the trend here, because certainly dividend investing, the original passive investing, back a few decades ago when the stock market, when the S&P 500 was paying a 3 to 4 to 5% dividend yield, this made a lot of sense and was very appealing. Nowadays, more and more companies want to keep that goodness, want to keep their earnings in the company for either expansion or research and development, technology, those sorts of things, and that seemed to have more growth potential. So dividend yield, very low, but dividend investing, this is where you're intentionally building a portfolio of dividend-paying stocks or dividend-paying exchange-traded funds or mutual funds that have likely a higher yield than this, somewhere around 3-4%, and then you're living off of those dividends to supplement your Social Security and leaving the principal in, not selling the shares. So how are dividends taxed? That's a common question when people come with this goal or this objective. How are dividends taxed? Well, it depends what wrapper they're in. If they're in a tax sheltered account, then they're going to follow the tax treatment of that tax sheltered account. So if you're investing inside of a pre-tax 401k that you then roll over to a traditional IRA and you're investing in dividends, when those dividends pay out, there's no taxation on them. But when you withdraw the dollars, then if you set it up your IRA where you have those dividends pay out, well, that's a withdrawal from your IRA, so it's going to be taxed at ordinary income tax rates. If instead you've got most of your dollars or you're building this up in a Roth 401k and Roth IRA, well, again, it's going to follow the wrapper. It's going to follow the treatment that those dividends will not be taxable while they stay in the account. But then when they're dispersed, that's considered a withdrawal from the Roth IRA and would be tax-free. That would be ideal. If you're holding dividend paying stocks or working this dividend investing strategy outside of those tax shelters, which this is fairly common. So in a joint account, an individual account, a trust account, not inside of a tax shelter wrapper, okay, then how dividends are taxed depends on whether they're considered qualified or non-qualified. Dividends tend to be qualified when they're from US-based companies here on our exchanges, and when you've held that company for held that stock for more than 60 days. There's more to it than that, but that's sort of a flyover. And if the dividend is considered qualified, then when it's paid out to you or when it's paid out, it's treated like it's taxed like a long-term capital gain. It's taxed at favorable tax rates, either 0% if you're in the 10 or 12% tax bracket, or at 15% if you're slightly above. So a qualified dividend has preferred tax treatment. Bond mutual funds or money market funds or income-based funds that aren't stocks that pay out a dividend, those are taxed like ordinary income. It's non-qualified. That's a non-qualified dividend. Those are taxed as at ordinary income tax rates. So how are they taxed? That's a little flyover. You want to favor qualified dividends because those have beneficial tax treatment to them. What about along the way? While you're investing, but you're not yet in retirement, you're reinvesting these dividends. Are those taxed? Yes. Yes, they would be. Even if you reinvest the dividends, they're going to show up on your tax return every year, which is why we always say start with that tax shelter strategy. Make sure that you're funding the Roth IRAs, your 401ks, those sorts of things based on your specific tax planning situation, so that as much of these dividends don't land on your tax return like they otherwise would, even if you have them reinvested. One other benefit, if you will, of dividend-paying stocks is people tend to appreciate the ride better during volatile times, during recessions, during downturns. Because yes, even though the dividend-paying stocks are going to be moving with the overall market, they could be in industries that may not be as volatile as maybe those growth or tech type industries that certainly will swing a lot during high volatility times. But you're also receiving that dividend as long as the company didn't cut it or they didn't completely stop it. You're still receiving that dividend during those challenging times, during those recessionary times. So it can feel a little bit better. Plus, if you're reinvesting those dividends, you're buying shares at lower prices. So it's another benefit of dividend investing. Tends to do a little bit better. People enjoy the experience a little bit better during market volatility. All that's leading to the big question: can I structure my investments, structure my portfolio where I can just live off of the dividends in retirement? Yes. Yes, you can. It's not easy. It's not for everyone. It takes a compelling vision and a lot of intentionality. Work with your certified financial planner on that. See if it makes sense to do so. Ensure that you've got a tax shelter strategy as well. Make sure that you're diversified, and you're certainly going to want to make sure that you're focused on dividend-paying stocks, because the dividend yield of the S&P 500, I don't see this trend changing. So work with your certified financial planner on that. Build out that 5-factor retirement plan, and when it comes to income and your investment strategies and the risk, focus on dividend investing. So work with their CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.